Welcome. In this video, Zbcn coin new all-time high is coming. We will analyze it. Don't forget to subscribe, like, and please watch till the end to understand. When we take a general look at the chart, we can clearly observe the formation of a highly striking and strategically significant descending trend structure. This trend plays a crucial role, especially in influencing short and medium-term price movements, and stands out as a structural formation that technical analysts pay close attention to. Currently, the price is situated very close to the upper boundary of this descending trend, in other words, near the resistance line. More importantly, the price is now in direct contact with this descending trend line. This moment of contact is highly significant in technical analysis, as such points often represent the beginning of potential breakout movements, or at least signal that one might be imminent. At this point, it's worth considering that this contact with the descending trend line might be more than just a simple touch. It could actually be a signal of an impending breakout. In technical analysis, it's been observed many times that when a price repeatedly touches a trend line and bounces back each time, that line tends to weaken over time, increasing the likelihood of a breakout. The current setup reflects this very scenario. While the price may have previously approached this trend line and pulled back, this time the interaction appears to be fundamentally different. Why? Because this touch is happening with higher volume, stronger momentum, and a more positive market sentiment. Moreover, a breakout of such trend lines doesn't just imply a short-term upward movement, it could also open the door to a much broader and longer-term bullish trend. When a descending trend line is broken, it typically generates psychological relief in the markets. Investors begin to feel that the selling pressure has been overcome and start acting more aggressively on the buying side. Naturally, this can lead to a much quicker upward price movement. In the current scenario, the price touching this resistance line can be seen as a very exciting development by many technical analysts and traders. Right now, the technical indicators support the idea that the price has strong potential to break through this descending trend to the upside, especially when considering the recent increase in trading volume and other indicators pointing to upward momentum. The likelihood of this trend line holding appears to be diminishing. Additionally, with other technical indicators also producing signals that support a breakout, the chances of a significant rally increase substantially if the price breaks this critical level. If this descending trend does indeed break, we're not just talking about a short-term move. On the contrary, such a breakout could pave the way for the formation of higher highs in the bigger picture. In technical analysis, breakouts from descending trend lines are often followed by a move known as a retest, where the price pulls back to test the broken line, which now acts as support. If the price breaks out and then successfully retests and holds above the line, that would be a very strong signal that the bulls have fully taken control. It's also important to remember that descending trend lines often represent investor psychology in the markets. This line symbolizes the belief among market participants that the price cannot rise above a certain level. But once the price breaks above this line, that belief is also broken. Overcoming this psychological barrier usually indicates that buying pressure is starting to dominate selling pressure. Therefore, the current contact with this trend line is not only technically, but also psychologically significant. However, we can't rely on trend lines alone to make solid decisions. Let's take a look at other metrics as well. Stay tuned. When we take a broad look at the chart, we can see that there is a highly critical and technically strong support zone located just below the current price level. This area stands out as a key level where the price has historically bounced back several times, drawing in strong buying interest and becoming a zone that market participants closely watch and react to. From a technical analysis perspective, this support zone can be seen as a psychological safe haven, an area where investors feel confident in maintaining their positions or initiating new long trades. Support zones like this tend to limit downward movements, as buy orders usually kick in strongly each time the price approaches these levels. In the current scenario, the price continues to trade above this important support zone, which is a positive sign indicating that the market still holds a bullish bias. If there is any pullback or correction, this zone will likely act as a cushion, limiting the decline and potentially pushing the price back up again. Looking back at historical price action, it's evident that this support level hasn't just been relevant in the short term. It has served as a decisive area for medium-term and even long-term trades on several occasions. Every time the price has come down to this level, it has met with strong buying interest and often reversed to the upside. This highlights just how committed and influential buyers are at this zone. To put it in more technical terms, support zones like this are areas where demand outweighs supply. As the price nears this level, buying pressure intensifies, diminishing the effect of selling pressure and preventing further downside. Therefore, the fact that the price is currently holding above this zone suggests that even in the event of a short-term drop, buyers are likely to step back in and support the price, helping it to bounce and resume its upward movement. Additionally, considering the liquidity concentration just below this support level, it's reasonable to assume that large investors may be inclined to open new positions or scale into existing ones if the price approaches this area. Institutional investors, large funds, and professional traders who rely heavily on technical analysis often pay close attention to these kinds of support levels, building their strategies around them. This reinforces the idea that this zone is more than just a price level. It's a key area that influences broader market behavior. For many investors and analysts, zones like these are seen not only as buying opportunities, but also as the starting points for new trends. If the price bounces from this level and starts moving upward again, it can instill confidence in market participants and increase buying appetite. As a result, the price doesn't just rebound, it could initiate a strong new uptrend. It's important to remember that in technical analysis, support levels are not just areas that prevent further downside. They are also strategic foundations for future bullish movements. That's exactly the kind of setup we're looking at right now. As long as the price remains above this key support zone, the overall bias appears to be to the upside. It's clear that buyers are still active in the market, treating dips as opportunities and maintaining their positive outlook for further gains. The vortex indicator is one of the most powerful tools in technical analysis, especially for understanding the direction and strength of the trend. When we examine this indicator, we can clearly see that the blue line, the positive vortex line, is currently above the red line. This is a very positive signal that there is a bullish momentum in the market and that the buy side is currently more dominant. The blue line above it indicates that buyers are more active in the market, and the trend is likely to continue upwards. Especially as long as this positive line continues to move upwards, it is understood that the bullish trend is gaining strength in price movements. The current chart structure also supports this view. The fact that the blue line is still above the red is a development that reinforces the confidence of market participants, increases the belief in the uptrend, and supports positive expectations. In technical analysis, the vortex indicator gives us an idea about the direction of the price and also reflects how strong the current trend is. When the blue line is higher than the red line, it means that buyers are dominating the market and there is more buying power than selling pressure. This suggests that the price is likely to reach higher levels in the coming time frames. Vortex shows trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.